Well, you're watching Budget Hotline here on ET Now. Thank you for tuning in. This is our pre-budget special. We've been answering your questions live for the last 2 weeks in the run-up to the big budget, and that announcement happens tomorrow. Today we're going to talk about tax, but if you have a question about anything to do with your investments, whether it's tax or if there's something you're nervous about, really when it comes to your personal tax and the budget, our phone lines are open. There'll be a number on your screen shortly, and you can pick up the phone and you can call us and ask us those questions. Mayur Shah Partner-Tax at EY is in the studio with me to help me answer those questions. Mayur, obviously lots of announcements, and so here's my question, and I know that a lot of homework is being done at EY right now. We started off assuming that because the average salaried middle class Indian stood in line during demonetization and supported the government, that there will be some sort of tax goodies available in this budget. But we're now hearing more and more sounds of perhaps a populist budget that might not exactly be targeted at the middle class. Is that what your research is also telling you at this point? The buzz that you're hearing come out of North Block?
It's not really. The way I look at it is that yes, it is going to be a good budget for even lower or middle class income person, because I think whatever has happened so far in past, I think it needs some corrections in order to build up and to make sure that people remain compliant with the tax requirements.
So what sort of corrections are you expecting?
So my expectation still remains the same, that for a salaried employee there would be some kind of standard deductions which will be introduced. At the same time, I also believe that tax rate or tax slab will be enhanced, and tax slab rates would be different from what it was earlier. Basic 10% would apply between 5 to 10, 10 to 10 lakhs to 15 lakhs could be 20%, and about 15 lakhs it would be still 30%.
Okay, all right.
So, and 8IC limits I believe should be enhanced and will be enhanced. Also, the income from house property where interest is eligible for deductions, which is up to 2 lakh for self-occupied property, which could then get increased 2.5 to 3 lakhs.
Are you expecting service tax to be taken closer to maybe 18%, which is the GST rate, or do you think it will be left at the 50% where it is today?
I would believe that it would be left at the same percentage, and I don't think it would be aligned to that. Given that this has to be implemented by 1st of July, I would not expect any tempering on the service tax rates.
All right, let's take a question. Prakash Trimbak Bhavi has written in from Mumbai. He says, during the note ban, it was announced that ladies can deposit up to 2.5 lakh rupees in their own account of old notes. Is it allowed under the IT law if the housewife has no source of income? Can my wife deposit money on a regular basis and save on tax? So I think what he's asking is basically of a clubbed income. If his wife doesn't have an income, is she allowed then to deposit 2.5 lakh rupees? But technically from an income tax point of view, that'll be clubbed with his income, isn't it?
So if the clubbing provision would get attracted when any gift is being made by husband to a wife, and not in any other scenario. If income, if the money belongs to the husband and then deposited by wife, then certainly what you said makes sense and it is being true. However, if she has some other income, like say taking tuitions or any other source of income, and 2,50,000, which is basically exempt income, that same is being deposited, there is no question which will be asked. And to my mind, housewife, when they have multiple savings, and this money is deposited out of saving, also will not be questioned by the tax authorities.
All right, I'm told there's someone on the phone line right now. Deepak is on the phone line. Deepak, go ahead. What's your question?
Yeah, good evening, ma'am.
Good evening.
Sir, I'm planning to go for a second home in this coming financial year, that is 17-18. My question is, what will be the kind of tax treatment or tax rebate which I'll be eligible? That is sort of a ready-to-home purchase in terms of the interest part as well as the principal part. And what are your expectations, especially for the second home in this forthcoming budget?
All right. So the good thing is that for the second home, the tax benefits are actually higher than the first home as far as the interest on his home loan is concerned. So first of all, that's an advantage that he gets. If you want to explain that to him, and then we'll talk about your expectations from the budget.
Yeah, you are absolutely right. When a person is holding first or first home, which is generally being considered as self-occupied property, and for self-occupied property, interest deduction is restricted to 2 lakhs as of now. But if second home is there, it will be even whether it is let out or not, it will be considered as a deemed to have been let out, and the interest which is paid on that property will be entirely allowed as a deduction. And therefore, there is no restrictions, or there will not be any announcement which will happen in respect of second property as such.
Because it's already unlimited, so if it can't be taken higher, any higher. Everything that you actually pay as interest, you can deduct from your income, which is a great place to be. Seth is on the phone line from Bangalore. Seth, go ahead. What's your question?
My question is, I'm opposed to increase in service tax.
Yes.
We're already paying income tax 30%, service tax 15%. Added to that, we've got to provide 2% for charity, and then corporation tax 11%. We're running a business of software infrastructure. We need money for water in Bangalore, and we need something to provide drinking water facilities. There must be better cities. Bangalore is earning all the foreign exchange for the country, and it's being neglected. We have no proper local drains. We have no water to drink. There's going to be bloodshed if government does not do something for better urban cities, at least for drinking water purposes. All fights with neighboring states, river water supply should be brought to an end, and special funds should be provided for providing drinking water.
That's a very good point. And Mayur, we have to talk about this at some point, especially during the budget, because and I personally I understand what Seth, I understand his angst, because the salaried class, or the white collared businessman at this point, people are paying a lot of tax. If you combine direct and indirect, along with the local taxes that we pay our municipalities, the property tax, all of that together, that is a lot of money that goes out as taxes in any of our cities, whether you're looking at Mumbai or you're looking at Bangalore or you're looking at Delhi. But the infrastructure that we receive in return is very poor in all our cities. We don't have clean air, clean water, we don't have playing grounds for our kids. There's no basic infrastructure, traffic is a nightmare, and this is uniform across the board. On some level, there has to be, at least in this budget, a focus on upgradation of urban infrastructure. Are you expecting that the government's focus on the Amrut project, on smart cities, will continue through this budget?
I believe yes, it should and it will continue, and I think there will be more focus on utilization and improving infrastructures and other facilities. And I have been at least seeing that the government is trying to put more effort in improving their administrations and providing appropriate infrastructures to the nationals of this country.
Well, of course, that's something we're going to keep a very close eye on. The fact that even though there are allocations that are made to a lot of these massive plans, are the allocations being used? Are they being used in an honest manner? Sitaram is on the phone line from Bangalore. Sitaram, what's your question?
My question is, I'm a retired person. Total income is my around 2 lakhs only. Okay. I have recently leased my house, rent a house to 2.5 lakhs this financial year.
Yes.
And I'm getting rent 5,000 rupees per month, one house. Another place I have leased for 2.5 lakhs. My question is whether this 2.5 lakhs is taken for income tax calculation this financial year. In that case, my slab will increase. My actually total income without this 2.5 lakhs will be within 2 lakhs, around 2 lakhs.
No. So, Sitaram, for this assessment year, for 2016-17, what is your total income from both sources together?
See, my rental and all this, I'm investing in stock market also. Total, it will be around 2 to 2.21. That is all.
Including the rental income that you have made?
Yeah.
And the lease?
Yeah. Lease is excluded. This year only I have given. So that is 2.5 lakhs I have given for 3 years.
Starting when? When did you start that lease?
It is last month only. That is December I have given.
Right. So Mayur, those 4 months will get counted in this year, right?
That is right. So only 4 months will be counted, and the balance period will be counted in the subsequent years. So you have to consider only income for the last 4 months only.
So if it is 2.5 lakh rupees for 12 months, you take you take a third of that and actually calculate that for 4 months and add that to your income, and then that does put him in the taxable bracket, Mayur. So he's going to have to pay his tax, file his taxes, all of those things.
Yes. So given that 2.5 lakh is the income, and the total income for the current tax year is going to exceed 2.5 lakh. certainly there will be some tax which needs to be paid. My guess is that his slab rate would be only around 10%, and therefore the only 10% above 2.5 lakh needs to be paid, and and he has to file his return with the tax authorities as well.
All right. So the big change for you will be, of course, filing your returns with the tax authorities as well, and you might want to consult, a tax advisor when you do that. Sachin has written in from Pune. He's a salaried person in the 30% tax bracket. He has a home in his ancestral, property. He wants to invest in a flat in Pune purely for the income tax benefit. How much of a home loan should he be able to take to avail the maximum tax benefit of the interest component? So basically, that would be, Mayur, based on if right now it would be, it could be counted as his second home. So could that be then counted as an unlimited tax benefit?
Absolutely right. To the extent the first property is registered in his name and income from there is being offered as a self-occupied property, then the second property needs to be offered as deemed to have been laid out. The only thing one has to consider is, while any second property which is being offered to tax, there is a notional rent which one has to consider, and thereafter interest deductions will be allowed, and accordingly one has to compute the taxable income. But certainly the entire interest amount will be eligible for deduction, and he should be able to claim that benefit as well.
All right. So the entire interest amount will be eligible for deduction. So how are you going to then calculate how much of a loan you should be taking? You should You should actually take a loan depending on the property that you're going to buy. We're going to have to take a very quick break. We'll come back and talk more about saving taxes on the other side. Don't go anywhere. Watching Budget Hotline on ET Now. We're live and we're answering questions that you might have about your tax in the run-up to the big budget announcement. Desai is on the phone line from Surat. Desai, go ahead. What's your question?
Basically, I wanted to know was that right now, currently in the individual capacity, the expense that I am getting is like the tuition fees and all that is being considered in the expenses.
Yes.
In my return. But what I wanted to know was whether since the government is increasing the GST by 3%, as the news has been telling, if all expenses are included, even if at all I buy a pencil and the government consider it as my expense, people would start taking bills, and that way vice versa, government can also have a very better revenue, and individuals can also benefit from that. So whether that is possible or not at the government end.
Mayur?
Yeah, so what you are saying is that any taxes paid on expenditure which is incurred, and if you are going to pay a tax on whatever services you render, whether it can be offset against that or not. In answer to that is, so far as you are able to maintain details at a transaction level and whatever you have purchased is going to match with what you have paid as a taxes, then certainly you will be able to take advantage of that. So from that point of view, I think it is going to be a good system if we fall within GST regime.
Mr. Desai, do you have any other questions?
No. Thank you. No, I don't have. Thanks a lot.
All right. George Samuel is on the phone line from Kerala. He's an NRI. He's an email, I'm told. He's a senior citizen who has been abroad for 20 years, and he wants to know if there's any tax filing exemption for NRIs who've just returned to India. He says if he takes a bank loan by pledging his deposits, can the deposit interest be received and the loan interest be paid off, be set off against each other for tax returns, and only the difference be reported for tax? Unfortunately, Mayur, I don't think we have that availability for us, that you take a loan and you offset the interest coming in from your deposits.
You are absolutely right. Unless the loan is been taken to make a deposit, in such a situation one can offset interest received against interest paid. But as far as deposits are made and that has been hypothecated and interest is paid on account of loan taken, in such a situation there are no deductions which is being allowed as of now, unless a person is trying to carry on any business and interest is related to any business activity.
But actually, if he has just moved back after, being overseas for 20 years, while he does have to file his taxes, he has the ability of maintaining his, NRE deposits for one more year at least, which means that they can still be tax-free, can't they?
Absolutely. If it is NRE deposit, they can. But if there's certain deposits are not NRE deposit, but NRO deposits, in such a situation, those will be subject to tax in India.
All right, so just make sure that they are not regular Indian fixed deposits or NRO deposits. NRE deposits can be held for one more year after you come back to India, which means they'll be tax-free for one more year, so you don't have to do the whole offsetting. Ashish Saha has written in from Kolkata. He bought a flat in Kolkata along with his brother in a joint loan and on their joint names. He says our EMI will be debited from a joint account in a bank. Can both of us claim the house loan benefit under Section 80C? They most definitely can, can't they, Mayur?
Yes, they can claim 8IC benefit in respect of their respective shares. So, the amount which has been paid out of their own account, even if it is jointly held, but if it is portion which is available for each individual, the same can be claimed as a deduction for 8IC.
All right, so you can both claim, but remember, you will have to declare exactly, you have to show that the money is coming out of your respective accounts to the portion at which you're paying, and that's as much as you can claim. Satish is on the phone line, I understand, from Dhulia. Satish, can you hear me?
Yeah.
Hi, Satish, go ahead. What's your question?
Oh, I'm a senior citizen.
Yes.
And recently I got some small agriculture land, which this the National Highway
Yes.
has taken 700 square meter.
Okay.
So is it taxable now, the amount that they paid?
Okay, so you've had some land that has been acquired by the National Highways Authority, and you want to know if the income that you have received from that is taxable. Mayur, I believe it will be taxed, won't it?
It will be subject to tax as of now, provided if you make investment in specified security or in another house property. Until then, it will be subject to tax as long-term capital gain, assuming that it is being held for more than 3 years.
Yes. How long have you been holding this land?
Kilometer from our place.
Okay, so you've had it for more than 3 years, I assume.
Okay.
Okay, so just to clarify that to you, if you've held the land for longer than 3 years, you will have to pay long-term capital gains.
I got 8 lakhs rupees for that.
You got 8 lakh rupees for it. Okay, so what you have to do, sir, is get a tax consultant to help you calculate what is the long-term capital gains tax due after indexation. And then you can invest that money, only the money that will be taxed as a profit, in a couple of bonds that are available to you, which which you have to hold for 3 years, if I'm not mistaken, and then you'll be able to avoid that tax, right, Mayur?
That's absolutely correct. You have to invest in capital bonds, capital gain bonds, which are of National Highway or any other authorities, and then you can claim exemption so far as investment does not exceed more than 50 lakhs. So what you have to do is determine the gain, invest the gain into in these bonds, and then you will be eligible for exemption.
All right, we hope that helps, and let's take one last question. Satya has called in, has written in from Chennai. He's travelled overseas for a duration of 4 months due to work, and during this period, he used to get paid in India but get daily allowances while overseas. Now, he says the Indian salary component is taxed automatically as TDS. The amount saved on daily allowances brought back is not. Now, since this is an income generated outside of India, is it taxable? Mayur?
So, taxability of these allowance depends upon your residential status. Assuming that you are ordinarily resident and you have not spent this money for which this allowance being paid, then this allowance will be subject to tax in India, even if it is this has not been subject matter of TDS.
So just to clarify, Mayur, how many days in a year does one person have to be outside of the country to qualify as an NRI?
So person to get qualified as an NRI, he has to be outside India for more than 182 days to get qualified as a non-resident. However, there is another condition which one keeps ignoring, is that a person who has been in India for 60 days coupled with 365 days in preceding 4 tax years, in such a case also person becomes resident of India. So both the conditions are not satisfied. Only in that circumstances person becomes non-resident. So
And
not
so
just
I'm
one.
assuming that if he's been, in this particular case, been overseas for only 4 months in the year, he doesn't qualify as an NRI, and hence he will have to pay tax on his allowances?
Absolutely right.
All right, so unfortunately you'll have to pay tax on his allowances. Mayur, even if he has spent the money overseas before he came back, will he have to pay money on the entire allowance or only on the savings on that allowance?
Only on the saving. I'm assuming that allowance is being paid for meeting their daily requirements over there.
Yes.
To the extent amount is being spent, there is an exemption available under section 10, and the to the extent amount is not being utilized for the purpose for which it has been granted, in that situation that will be taxable.
All right, we've come to the end of the show. We've run out of time. I want to thank Mayur for spending time with us this evening and answering questions. Of course, that big budget announcement is tomorrow, and on this channel we'll be right here to help you understand the budget right through the day, especially at 7 p.m. in the evening when we have the biggest experts come into the studio. We'll talk about your finances, and you can ask us your questions at 7 p.m. tomorrow. Thanks for watching.
Thank you.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.